that you have so much more power in agency than you could possibly think. When I started working on the trigger lead bill, all I heard was no chance. The credit bureaus are too powerful. They're too powerful. They have too much money, all this and that. And it doesn't matter that you are clearly on the right side of the argument. It's never going to happen. Now, first of all, that like when we first started, there were a couple other groups, but not a ton, but we weren't completely alone. And then as we started getting some traction, some big dogs in the mortgage world came on board too. So we weren't just, it wasn't completely a David versus Goliath situation, not even close. Rocket Mortgage has been supporting this legislation forever. But money matters in DC, but being right still matters sometimes too.
Hey everyone, welcome to another episode of the Mr. Deed podcast show. My name is Omar Andreasen, aka Mr. Deed, and today I am happy to have Mr. Brendan McKay on our show. He's actually the Chief Advocacy Officer and co-founder of the Broker Action Coalition and the lead strategist behind its 3-year national advocacy campaign. He is recognized for his expertise in mortgage industry policy and consumer protection. Brandon also owns McKay Mortgage, bringing direct industry experience to his advocacy work. Dude, thank you so much for having I was about to say for having me on the show, but I think it should be the other way around, should it not?
I'm glad you feel that comfortable with me, Omar. That's good, man. Yeah, hell yeah.
So tell me, what made you want to get into the mortgage industry?
My mommy, of course. I'm a
Oh, I
child in
love that.
nepotism, man.
Oh,
So I graduated college in 2005, which was an interesting time in our country, like job market wise. It wasn't a great job market time, but it was for the mortgage industry. And this is a story, you ask anyone how they got in the mortgage business, and it's some version of I was doing all right with what I was doing, and then there was this opportunity that I'm smarter than that person. I can make more money than them, and that's more or less what it was. I was having some 9 to 5 job that I didn't really like, and my mom was opening a new mortgage office, a new operations center for a big national company. I was like, I don't want to work for my mom. I don't want to work for my mom. And then she says, here's what I'll pay you. And I go, I'm working for my mom. And that was quite some time ago, and a lot has happened between now and then. But April will be the 9th year of McKay Mortgage, which my mom and I opened together. It's something I'm very proud of. So I work with her every single day, and I love it, man. So life is good.
that's awesome, man. That's a great story. Yeah, I couldn't work. You know what? I actually did work for my
I
mom. Now that I'm
see.
like, I was like, I
That's
couldn't work. Wait a minute, I did.
the
She was
number
my
one quote I
manager.
get. I could never work with my mom. And I go, I probably couldn't work with your mom either.
So yeah, I was like, I did work with my mom, but it was brief. She was my restaurant manager. Yeah, I
There you
did. I
go.
did. I remember that now. All right, so let's get into some of these awesome talking points I have here. So let's talk about the grassroots advocacy changed federal law. So, the 3-year journey to pass the Home Buyers Privacy Protection Act and the predatory trigger lead practices, from that to what we see today, how much has the laws changed throughout since you've been in the industry?
Not a lot. Since the whole time I've been in the industry, following the crash of 2008 and Dodd-Frank and all the RESPA and everything that came from it, a ton. It changed a ton in a short period of time. And then
Mhm.
not that a little bit here and there and stuff like this bill, though, which colloquially is like we call it the trigger lead bill. This is one of the more major pieces of legislation, at least to like originators and certainly to consumers going through the process. Are they walking around the street thinking about this stuff day in, day out? No. But if you're going through the home buying process or you are refinancing, it's a big deal. And so, to your audience, any of the real estate professionals out there will be familiar with it, or anyone that's honestly bought a house in the last couple of years will remember it. Like when a mortgage professional pulls someone's credit that's applying for a mortgage loan, what would happen is they would get a slew of phone calls and texts. Like the next 72 hours, their phone was unusable from solicitors. It led to annoyance, like confusion and frustration. And a lot of times, like annoyance and frustration at their loan officer improperly thinking that their loan officer sold their information. And that's not what happened. What was happening was the credit bureaus were selling their information. Experian, TransUnion, Equifax, like things that people think of as like almost government institutions, but they're not. They're private companies. They're publicly traded on stock exchanges. And they, because of a law written in the 1970s with the Fair Credit Reporting Act, a fantastic law, but in it, it gave the credit bureaus permission to sell consumer data without their permission, which you could justify at the time because to shop for a mortgage, you had to walk from one bank branch to another and it's just clunky process. That ain't the case anymore. There's no more justification for it. And it took 3 years to get the bill from beginning to end. And it shouldn't have made sense. The credit bureaus don't love it though, so they fought it a little bit. But we were able to get it done. It was signed into law 3 months ago, and it goes into effect on March 3rd. Pretty stoked about it. And from that point forward, it means when you apply for a mortgage, if you're getting unwanted solicitations, it will be either from the current mortgage it's company that's servicing your mortgage, the person that did your last mortgage, or if you're the bank that you have a checking account with. I imagine you'll get one call. If any, first-time home buyers probably won't get any phone calls at all. A big change from thousands of phone calls to 1 to 3, 0 to 3, I would say. But yeah, it's cool stuff, man.
That's awesome. Yeah, especially so I had a client who just did the application process and he goes, "Oh my God." He goes, "I'm
Yeah,
sick and
dude.
tired of all these phone calls from all these lenders calling me, just being harassed."
Yep, it's
And that, yeah, yeah. So I didn't know it was going to go into effect March 3rd. That's
March
awesome.
3rd. There was a six
Okay.
month like implementation period on it. And March 3rd, that'll be it, man. And it's not one of these things where it's like, oh, they'll figure out a way around it. Like it's not about the behavior of the solicitors changing, right? It's the
Mhm.
behavior of the credit bureaus changing.
Yeah.
We're cutting it off at the spigot. Now, credit bureaus do a lot of things that I do not like that they do, but they're all legal. They might be slimy and scummy, but they're legal, and now that if they continue doing it, it's illegal. And I don't think they're gonna cross that bridge. The problem will be very close to solved. And yeah, man, I'm looking forward to it. I'm thinking we're gonna have some sort of maybe New Orleans style funeral theme, like death to trigger leads on March 3rd or something like that. But it'll be good.
That'd be awesome. So I heard this from a lender not too long ago, and I wanted to run this by you.
Yeah.
So this wasn't even on my notes, but just clicked inside. Coming to when it comes to FHA loans and any Fannie Mae and all those government-backed loans, they're saying now that i- is it true that they're not looking so much at credit score as heavy anymore? Now they're looking more at liquidity. Let's
No,
say,
I know where this is coming from, and I
okay,
understand why it's confusing. And this is specific to Fannie Mae and Freddie Mac.
okay.
Okay. So Fannie Mae and Freddie Mac, they used to have a threshold where you had to have a 620 credit score, or you just would not get what's called automated underwriting approval ever. Okay. Now, they just got rid of that floor. And when you hear the headline and that's all you hear, you're like, oh, whoa, they're going to be doing a bunch of like lower credit score loans. No, that's not what's going to happen. Frankly, unless you're talking about a loan with a lot, like a 50% loan to value or 50% down payment and lots of
Mm,
extra reserves and like a really clean profile otherwise, even with a 640, you're very unlikely to get an automated underwriting approval on a conventional loan. And even at a 620, even less so, because of what the credit profile of someone like that borrower probably looks like. Okay. There's exceptions to every rule, but what I just said is generally true. So most of the time, people like the difference between conventional and FHA, really the line between the two of them is credit score. Okay. If you're below a 680, you're probably going FHA. If you're above it, you're probably going conventional, give or take, plus or minus a little bit, right? Now, they're getting rid of this floor, but that doesn't mean a bunch of automated approvals are going to start popping in because already that automated software was not looking at the score at all. Except for
mm,
that 620 score, it looks at credit profile, which is different than score. Score is based on credit profile, but it's not okay, 670, yes, 671, yes, or 669, no. Like it wasn't doing that. It just looks at trade lines and stuff like that, looks at the raw data. It will still look at the raw data. That governor is just gone. You're not going to, I don't think you're going to see like a bunch of 580 credit score conventional loans more than before, but a statistically irrelevant number. The reason, so why did they do it? The reason that they did it is that currently you can only use FICO. FICO is a scoring model, right? There's FICO and then there's the credit bureaus. The credit bureaus are the data aggregators, the credit repositories, and FICO is a score that's slapped on top of them, okay? Fannie and Freddie are in the process of implementing another scoring model called Vantage, okay? And instead of coming up with Vantage scoring model works differently, I'll explain a little bit in a second. And instead of creating floor for figuring out where the floor for Vantage is, they just said, who cares? The floor doesn't really matter in the first place. instead of rewriting all this code, let's just get rid of the floor for Fannie Mae or for FICO and just put them both on the same playing field. So that is the reason that they did it. And they came out afterwards and said that's the reason that they did it. And that's also why I just don't think you're going to see a big shift in the types of loans that Fannie and Freddie are doing as a result. So there you go. Like one of those things, the headline's a lot more exciting than the boring technical details, but unfortunately the details are usually what matters.
Those headlines, they excite everybody, don't they?
I know. I'm
Okay.
bad at creating them. Thank God for ChatGTP. It helps me create some stuff that gets people attention so they read the boring, important things I have to tell them.
Gotcha. Oh, fucking headlines. All right, so we got to discuss them here. So, what was the story behind the congressman signing the bill live on stage at your event?
Dude, that was cool. Congressman John Rose out of Tennessee. He's currently running for governor of Tennessee. He has been the lead sponsor for the trigger lead bill, both this Congress and last Congress, and really went to the mat. Of course, no bill gets passed without the sponsor being involved, but God bless him for the work that he did on this. And so we have our big fly-in every year. Last year, I think we had 250 mortgage brokers. We're expecting close to 400 this year, April 20th through 22nd. If you want to come speak truth to power in DC, you're more than welcome, brokeractioncoalition.com. But we have speakers. We have different industry speakers and lobbyists and congressional staff. And we always get a couple of members of Congress to come speak as well. Of course, that have things to say that are relevant to our audience. John Rose, of course, like we were going to, he spoke to us that morning. The rest of the day, we were running around Capitol Hill, just beating on doors, trying to get co-sponsors wrangled up for his bill, right? So he spoke to the audience. And at that time, we worked on this for 3 years. Congressional sessions are in two-year cycles, right? So we came damn close to getting it passed at the end of last year, really damn close. But this year was a new Congress, right? So technically the bill has to get reintroduced. You're not starting from scratch. On the most technical level you are, but you expect most of the co-sponsors from last year to come back on this year, and you have a lot of momentum, right? And so at the time, the bill had not been introduced yet, which wasn't ideal. It wasn't that big of a problem. The bill was well enough known that like we still like could talk to offices and it'd be okay without a bill number. But he said, I have a special surprise for you today. I'm actually right after this, I'm walking to the hopper, which is like a Capitol Hill term, to reintroduce the bill. And I've got it right here and I need to sign it. And I was hoping you all could be here when I signed it to reintroduce it. And I was like, hell yeah, man, let's get up there. So we go up to the little podium we have up there and you sign it. There's pictures of it and it's like one of probably the proudest moment of my professional career. Definitely the coolest thing that happened during my professional career. And he signed it and everyone got all stoked and we got a bunch of cool pictures and stuff. And then he's like, all right, I better hurry up and get this introduced so you all have a bill number to be talking about. And he went and did it. And it was just an unbelievably cool moment. I've only been doing this, I don't know, for four years now. And I'm just out there doing it on the fly. Everything's new to me. We've got unbelievable lobbyists from Forbes Tate. These guys are seasoned like financial service lobbyists, great people, really good at their jobs, have seen just about everything there is to see. And they were like, I've never seen anything like that before. And I was like, oh, hell yeah, that's very cool. So it was neat, man. Special moment.
That's awesome, man. Congratulations. That's
Yeah.
huge. That's huge. So kudos. All right. Let's talk about some hidden threats to real estate professionals.
Okay.
In your opinion, what's the biggest threat facing real estate professionals that most people aren't even talking about right now?
So specifically to real estate professionals and realtors, I don't know. Is it the biggest threat? I'm not sure, but I'm not sure they're thinking about it. And I'm not sure I'm right either, but I think it's something that every real estate professional, if they take themselves seriously, should at least file away in their back of their mind. Now, and this is, of course, related to the NAR settlement, right? So the NAR settlement was interesting, right? The fallout from it, most people at least expected real estate commissions to go down. And that's really not what happened, right? If anything, buyer's agent commissions have gone up. And why is that? So the reason is in the old world, the buyer's agent commission was essentially negotiated by the listing agent with the seller before it was even under contract, right? Like it was negotiated on the listing agreement. I'm going to make this, the buyer's agent's going to make this, okay? And they wanted as low a number as possible, but we got to make sure people want to show the house, and the listing agent needs to maintain a decent reputation within their community and yada. So it was at whatever number it was at in that community. Now, that's not happening anymore, right? I'm going to list your house. Here's what my commission is going to be. We're going to get offers. We're going to look at the sales price. We're going to look at the buyer's agent commission. Most importantly, we're going to look at how much money is sitting in your bank account at the end of this. And we're going to make decisions based on that, right? And now, and as it should be, buyer's agents are negotiating directly with buyers on what their commission is. And guess what? Good at negotiating, especially when this is something brand new that there's not a lot of information out on. And they're going to go, look, my commission is going to be 3%. Don't worry, the seller's going to pay for it. If they don't, they say whatever they say. I'll cut it, or you're going to have to pay a little bit, or whatever it is, right? But the point is that buyers are not great at negotiating on this topic right now. I think that's going to change over time. I think eventually a couple of things will happen. More information will be available online, but you'll also start seeing, in my opinion, sharp and cutthroat agents. And if I was an agent, I would do this, frankly. And if I'm talking to a prospective buyer who is talking to multiple agents, I'd say, look, yeah, the seller is going to pay for it. Their commission's 3%, mine's 2.5%. It's not coming out of your pocket, but guess what that means? That means that your offer is going to be 0.5% higher with me than it is with anyone else, and that much more likely to get accepted. Or we can do this, or we can do that. And I think that things like that will slowly start happening, and you'll start seeing brokerages pop up with that kind of stuff in mind. Right now, it seems to be more the traditional brokerages and then the online brokerages of the world that are just cut but offer terrible service. I think you'll start seeing a middle ground start popping up. I say I think because I don't know it, but I think there's a place for it. I think it makes a lot of sense. And if I was a realtor, I would just keep my eye out for it, open for it, and think about it. And you don't make definitive plans like it's definitely going to happen, but I think ignoring the possibility would be foolish as well.
You know what I'm seeing a lot of, and this is just here in the state of Florida. I'm seeing to where a lot of buyers are not necessarily working with a buyer's agent. A lot of the people now, they're trying to get a hold of the listing agent directly.
Yeah, I see that too.
And I brought this up in our leadership meeting, and I said, I think the reason why is because we real estate agents are not explaining the process to them because they don't understand it. And I'll give you a perfect example. We had one guy where I literally explained to him why he wanted to sign the buyer brokerage agreement with me, but at 0%. I said, I can't. So I explained it to him face to face. They said, oh, okay. He goes, okay, I understand. And then I sent it over to him and he goes, no, I need it at this. So then I had to put it in writing. Again, goes, oh, he goes, I follow even more now. It makes
Yep.
sense because if I put 0, that means that I literally get paid nothing because I can go down, I can't go up.
Yep.
So yeah, and I think it's just one of those things where us as real estate agents really have to be crystal clear in that message. And by crystal clear, it might be have to be verbal and then also too, like now after this incident, what we're doing is we're putting this in our buyer brokerage. We're putting this actually in our presentation with our buyers.
You
So
got
yeah,
it. Yeah.
we're telling them, but then now look, just in case, because sometimes you know what, you don't know what's going on in their head, and maybe English is not their first language. So I'm like, let's just put it in writing as well, because then it's there, they understand it. Hope they should, because now not only they explain it to them, it's also in writing right in front of them as well, just in case.
And it's better this way. It should be this way.
Yeah.
And what you just described is something I definitely expected to happen, and it did, where realtors, right after the settlement, one thing that definitely, even though on average commissions went up, realtors had to start having a conversation that they never had to have before with buyers. And it's not a comfortable conversation. How much money I make, that's not proper dinner table conversation, man. And it's something that as an independent mortgage broker, I have to disclose my compensation where retail direct lenders and banks do not. So it's something that I was not comfortable with in the very early days of it. And then you get better and better at it. And as a result, the strong agents, especially in the beginning, are going to have a much easier time in this new world explaining their value than weaker ones might be. Having a conversation about how much money they make in a comfortable, confident fashion and a clear manner and getting good at explaining it directly and succinctly. Absolutely, man. You're definitely seeing a divide within the real estate community between the level of professionalism and being able to explain. And I would tell buyers in the beginning and still now, I have my realtors I work with, but we're not doing the traditional model. And I recommend business to realtors as much as the other way. And I go, here's some information. Anyone else you're talking to, like, you have any advice on how to find a realtor? And I go, talk all this typical stuff, friends, family, this and that. But like, when you're talking to them, ask this question, like, how are you compensated? Make them answer it and listen very closely to how they answer it, because they're not used to answering it. And you can tell a lot by the response that they give you. And I think there's a ton of truth to that. And even the example I gave you before, where it's like, they still think they haven't come around to it. And agents have a lot to learn. Like I see on these realtor Facebook groups and stuff, they're like, I got an offer and the buyer wants X% and this and that. Isn't that ridiculous? I'm like, who cares? How much money is your seller getting at the end of the transaction? That is all you should care about.
Yep.
Whether the dollar is coming from the bank or from the commission or this or that, who gives a shit? Just look at the number that matters. People adapt to change very slowly, but they'll get there.
No, yeah, I hope they do. Hope they do. One of the questions I always get immediately from agents is like, hey, listen, how much is the seller going to pay me? I'm like, I said anywhere between 2 to 3%, depending on how strong your offer is.
Yeah.
And you know what they say? Okay, but can you be more clear? Yes. Anywhere between 2 to 3%,
Yeah,
depending
that's
how
as
strong
clear as
your
it
offer
gets.
is. It's that simple because you know what? At the end of the day, you said it. The seller's going to look at how much am I getting? Oh, wait, I got to give the buyer 5 grand because for concessions. Okay, I'm okay with that. But now, hey, Mr. Real Estate Agent on the other side, I'm going to give you, because of my numbers now, I'm going to give you 2%.
Yeah.
Take it or leave it. And
Appreciate.
it's one of those things. If anything, then thank the seller that maybe the buyer brokerage agreement was signed for 2.5% or 3%. Thank the seller that he came up with 2%. Now you just have to worry about the 0.5% if you really
Yep.
want that 0.5%,
Yep.
you
Yep.
know?
Just like net proceeds, man. Net proceeds,
Yeah,
baby. That's
exactly.
like
I hate real estate agents. Anyways, I'll stop now.
like loan officers say that all the time, and I go, we're just as bad. So don't act like we're any
I
better.
know.
And all of
Oh,
us are the same, man. We're all a bunch of smart people that didn't get into this business on purpose, and we're all smart, but we're bad students, and we're just doing the best. Like none of
I'm
us
trying.
were A students, man. We might have done well on our SATs and stuff like that, but none of us were A students. I can promise you that.
Absolutely not. Look for shortcuts for everything.
Yeah,
All right, two more questions and then we'll
brother.
wrap this up. This one here, the role of the mortgage brokers in protecting homeownership.
Yes.
So, if mortgage brokers disappear tomorrow, what do you think would happen to the real estate market?
I think interest rates would go up to the consumer a lot. I think mortgage brokers are the ones, not the ones, like we are the ones that are lean and mean and are able to operate on lower margins because we have less overhead. I'm sitting here. There's a reason it's fuzzy behind me. My office is plenty nice, but I'm in a shared office space. I don't need some big fancy office. Like all my business is done online and stuff. I have this office just for a reason to get out of the freaking house. We have amazing employees. Like that's our overhead. I'm not running a bunch of advertisements on television, radio, and internet. I get business because I offer low rates and fantastic service. Now it requires a high level of expertise. This is my 20th year in the business. I spent a lot of time in operations and underwriting. I happen to know what I'm doing, but that's a disruptive model to more traditional stuff. And if that went away overnight, that your only option is channels that either first of all, that like their rates on average are going to be higher as it is right now. But if 25% of the market that has sharper pricing goes away, they can increase their margins because they're not getting it's just a less competitive marketplace, right? So I think that is what you would see immediately. I think that this is a generally true statement, but not a blanketly true statement. Mortgage brokers are we are the small business leg of the industry, right? The average mortgage brokerage is 5 to 10 people, right? Like we
Mhm.
aren't nationwide companies. We usually have a license in 1 to 5 states. Like I'm in the DC area, I have to have at least three, right? But we serve local markets. I get my business from sponsoring T-ball teams. I'm on the board of my chamber of commerce. I'm deeply ingrained in my community. And that's true for most mortgage brokers. So I think if we went away, you would just see less customized service to communities. And I'm in Bethesda, Maryland. It's one of the most affluent areas in the country. Everyone would be just fine and dandy. But when you're talking about some underserved communities, and not just first-time home buyers, but first-generation home buyers, English is a second language. I think you would see a real drop in service in some of those communities. And let me be clear, there are a lot of local lenders that are doing all the exact same things. If they're hearing that and getting offended, I'm not talking about y'all, but there is going to be generally true to what I'm talking about. And I think there would be less of it. There wouldn't be none, but those communities would be less served than they were today. And I think that's a shame. So yeah, I've never been asked that question before. What if we went away? And we almost did. And that's what motivates me. We went from 2008, we were almost 70% of the market. And within years, it was at single digits. And they almost went away entirely. But we're some resilient sons of bitches. So we're not going anywhere. Don't you worry.
It's like cockroaches.
Oh, yeah, yeah, yeah. That also comes to mind.
No, listen, and you know what? It's funny. I asked that question, but you know what is starting to go away? More real estate agents. The numbers of real estate agents are starting to drop
Yep,
hard,
yep.
really hard. And it's I think, and it's funny because it, the real estate agents get involved when the market is easy, right?
That's the same.
And then when the market's rough and tough, like it has been here the past 2 years, they're like, oh,
Yep.
this is a hard industry, and I don't get paid unless I get stuff. Oh,
Uh-huh.
so it gets it. I mean, it's getting really lean right now
Yep.
for us,
And
which
it's
I'm
the
okay
same
with.
here. Like the number of licensed loan officers, I think is down by, I don't think 70% is too much of a number from the peak of 2021. It's the same, it's even sharper here because it's completely driven by interest rates where
Mm,
when it's rates are really low and it's a refinance market, suddenly everyone that's a homeowner is a potential client, right? And then rates go up and refinances are few and far between, and it's a purchase market, which like you can trip your way through a refinance. If they qualified once, they're probably going to qualify again. And if it's delayed, who cares? They're already in the house. Service always matters, but it just simply matters less on refinances than it does on a purchase, where if you're delayed, man, you're talking about moving trucks sitting around. The seller might be delayed in their purchase on the other end. I've got Omar and another agent all over my back. And like it's a very different circumstance and requires a much higher level of professionalism than a refinance market does. So it's cyclical. And then you see a spike in a bunch of new loan officers entering the market. And then it spikes down. But the good ones that join the market, the good ones stick around. Like they're able to figure it
yeah,
out. And it is only the strong survive in our industries, baby. That's for sure.
yeah, 100%. All right, last question.
Yeah, brother.
Now, if you could leave just one deed behind, one action, mindset, or even a lesson for every single person listening today on the show, what would that be?
That you have so much more power in agency than you could possibly think. When I started working on the trigger lead bill, all I heard was no chance. The credit bureaus are too powerful. They're too powerful. They have too much money, all this and that. And it doesn't matter that you are clearly on the right side of the argument. It's never going to happen. Now, first of all, that like when we first started, there were a couple other groups, but not a ton. But we weren't completely alone. And then as we started getting some traction, some big dogs in the mortgage world came on board too. So we weren't just, it wasn't completely a David versus Goliath situation, not even close. Rocket Mortgage has been supporting this legislation forever. But money matters in DC, but being right still matters sometimes too. Maybe not on all the issues that you see on the headlines and things like that, but there's still some things that happen. They're too boring for cable news, but they can get done. And saying that whole it'll never happen, they're too powerful, they're too this, they're too that. I hate that bullshit. That is an excuse to quit before you've even started. And I think it's pathetic. I'm not saying that people that say that are pathetic, but I think it is a pathetic action and a pathetic attitude, and it's loser mentality, and I'm not here for it. And off on somewhat of a tangent about my own personal experience, but the first thing where I got started in all this stuff was I found out about a piece of legislation that was introduced in Maryland. It was relevant for my industry. I reached out to the state senator that was sponsoring. I said, "Hey, here's who I am. I heard about it. I love it. How can I help?" Next thing you know, I'm in Annapolis, Maryland, testifying it. I was told the bill had no chance of passing, and then it did. And it was an unbelievably empowering experience. I'm like, holy shit, man, I had something to do with that. That was really cool. And I've been hooked on it ever since. Your local politicians, whether it's at the county level or the city level, they will talk to you. If you email their office, someone will get back to you on your specific issue. If you ask that legislator to go out to coffee or have them over to your house, if you're a real estate professional, reach out to your local county elected official and say, "I want to have you in our office to talk to our team." They would drop everything to go talk to a bunch of realtors who are influential people in their community and are going to go around and talk to a bunch of buyers and sellers and say, "Hey, representatives came and this is what they told us. They're pretty cool. Maybe you should vote for them next time." The same thing is true for your member of Congress. If you reach out to your elected member of the House, and the senator might be a little tougher. There's only two statewide, but if you reach out to your member of Congress and say, "Hey, the next time you're back in the district, we'd love to have you come in and talk voters, they will absolutely try to make it happen. If they can't do it that time, they'll do it the next time. These people are so much more accessible than they think they are, and they want to listen. Most people have such a negative view of DC, and rightfully, most people can only name 10 members of Congress, and it's probably 7 of the same turds. They're just attention getters. There's over 400 members of Congress. Most of them are serious people who are flawed individuals, but they care. They do care, and it's their job to care, because if they don't care about what you have to say, they're not going to continue to get reelected. And I strongly encourage people to reach out more often than they do when something pisses them off or when something's good. They are more accessible than you think that they are. And I think if more people had that behavior, we wouldn't necessarily be in the same predicament that we might be nationally at this moment. So that is what I would leave behind.
That was awesome. That's
Oh
awesome.
yeah, brother.
Yeah,
Thank you.
that was definitely completely different from what we usually hear. And you
Yeah.
know what? I love that. I love that. So it looks like anyone listening right now, you have a homework assignment.
Yeah.
Okay. Brandon has given you a homework assignment. So you need to reach out to those politicians that you helped get there
Yeah,
and
man.
talk to them. There you go.
Democracy's on shaky ground at the moment, but it hasn't failed quite yet. So do something about it.
Love
That's what I
that,
have to
man.
say.
That's awesome. Listen, guys, hope you really enjoyed this episode. I know I did.
Oh yeah.
So just wanted to thank everyone for listening to the Mr. Deed podcast show. Please remember, actions build empires. Stay focused, stay hungry, and sometimes you just got to give life a little bit of whammo. I'm Omar Andreasen. Thank you so much for tuning in to the Mr. Deeds podcast show. Take care, guys. Have a blessed day. If this episode helped you understand real estate better, the next one takes it even further, covering everything from investing strategies to honest agent insights. Learn how to make smarter real estate decisions, whether you're a seasoned investor or just starting out. Click the video on screen to keep watching.